to the nationally recognized Real Estate Radio Network's Don and Gino Real Estate and Finance Radio Show on your hometown station, AM 1220 KHTS. Make sure to get great information or ask your important questions at donandgino.com. Now, back to your friends, Don and Gino.
Thank you for joining us again this week on the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220 KHTS. And you are joining us this week for our first live show. That's right, 12 p.m. to 2 p.m. in the Vault Media Studio, our custom-built studio right here at Cherry Creek Mortgage. And, of course, we made sure we brought in one of the best experts we can think of to kind of kick off our new facility. And we'd love you to join our new facility at donandgino.com. donandgino.com, and you can view us, watch us, listen to us, chat with us. You got it right here, because we have Mr. Neal Weichel in the house, #1 agent right here in Santa Cruz since 1999, and he is sharing with us what's been going on in our crazy real estate market. We're talking one of the most volatile markets we have seen in years, ups and downs and twists and a lot of changes.
Brandon put it well when he came on our show a few months ago. He goes, shift happens.
Shift happens. And it has. And Neal was very nice to just clarify a little bit of what happened in 2013. And what I love now is Neal's going to share something that I dig on. I absolutely dig when people are willing to throw it out there what their gut is telling them. Not just, here's what the numbers I read are. The numbers say that's going to do this. I'm telling you, Gino and I watch numbers, as you do, Neal. We watch numbers like a hawk. And if you just went by what the so-called pros or the media says, you're going to miss the boat. I'm sorry. You're just going to miss the boat in a lot of ways. Neal, like us, watches numbers, but he's also in tune with the market, because no one does more business out in Santa Cruz than Neal. Therefore, he sees more what's going on. He talks to more people, just like we alluded to in our previous segment. So, Neal, I really look forward to hearing more about your opinion of what we're looking at in 2014.
Yeah, well, thanks, Don. I mean, that's quite an introduction. And you know, the reality is the best way is you see some things, or you get a hunch that maybe something's happening in a certain segment of the market or a certain price point, and then you go, this is what's great about Santa Clarita, in my case anyway, you go and you network with all the other great top agents that I meet with literally every week. Hey, I'm seeing this. Are you seeing that? And that's really how you kind of confirm some things. I love to ask the question, and I'll do this next week, you know, how many people still think the market's going up? And you'll have 300 people in front of you, and you'll see them all kind of, is this a trick question? You know, and a lot of them raise their hand. And then you say, how many people think the market's actually declining? And then you'll see them kind of look around, and then you'll see some other people raise their hand. And the answer is both are right.
Right.
Okay? And the reason why both are right is because in the under 450 price range, I still think we have plenty of upside. Okay, we do, because that's where the buyers are, and the interest rates, I don't need to tell you, are still fantastic. And you know, the affordability.
Wait, say that again. Say that again.
The interest rates. Let's say it slowly. The interest rates are still fantastic.
Thank you. Thank you. Gosh, and we hear people, oh, they've gone up above 3.5.
Well, and everybody knows what happened in June, right? And it was like, for us, we saw it was like turning the spigot off. It really was. I mean, the market just, man, it changed so quickly because, I believe, in large part because of interest rates. But now, if you look at it, I mean, we're almost back down to where we were in April and May. And a lot of people, you know, they just mentally, they still think that the rates are well, they're up around 5. Well, no, they're not. Talk to Don and Gino. They'll show you. So as we get into 2014 and we try to help our buyers and sellers navigate this crazy topsy-turvy market, couple things. Number one, the buyer that wants to buy their first home, okay, there's every reason in the world to keep pursuing that. And in fact, right now, I think is really the best time, because it isn't the frenzy that was out there in April, May. And we get a lot of first-time buyers, thankfully, and we love to help them buy their first home because it's so fun and it's so exciting. And if it's properly done, they can still buy it. Now, they're still up against multiple offers. They're still in a challenging situation sometimes if it's a really good property and it's priced, you know, pretty well. So that's going to continue, and it's going to continue until we have more inventory in the lower price ranges. And quite honestly, I don't see that happening anytime soon. Now, the next part of the market is what I'd really like to talk about, because this is where you need to do your job and I need to do my job. In my opinion, and I've shared this with a lot of my fellow agents, the number one opportunity for 2014 is the move-up buyer. This valley has always been driven by the move-up buyer, always. I started my real estate career in 1991 holding an open house every Sunday, meeting people, and I'd help the people buy their first condo. We'd take the condo buyer to the 3-bedroom home. We'd take the 3-bedroom people to the 4-bedroom, and we'd take the 4-bedroom people to the big house up on the summit, and everybody was happy, and we'd put 4 or 5 transactions together.
Open the door for the first-time home buyer to come in at the bottom of that chain.
It always starts with that first-time home buyer. So since they're there, what we need, where the hole is in the market, is the move-up buyer. That's the buyer that we need to tap into. And I got to tell you, I've been calling everybody that I've helped buy a home in 2009, 2010, 2011, even 2012, and say, look, you may not realize this, or maybe you do, but you're up 10, 12, 15, 20, 25% from when you bought. With today's interest rates, you can go get a home that's 5, 6, 7, 800 square foot larger, or in a better school district, or in the part of town you want to be in, or shorten your commute, or whatever it is. And your payment is only going to go up X. Now that is a story that needs to be told. If we can get those people with the 3-bedroom, 2-bath home, okay, or the 3-bedroom, 2.5-bath townhome, or even the 4-bedroom, 2-bath home that's maybe under $500,000, and get them to put that home on the market and talk about moving up, this whole market will be a nice, steady 2014. If we don't, I'm going to tell you 2014 is not going to be as good a year as 2013 was. It's really, for our valley anyway, it's really predicated on us doing our job to get the message out to those people of what the opportunity is. Because it's no sales job. It is a real opportunity that, as long as rates stay low, is there for them.
Yeah, that's fantastic. In fact, one of the opportunities that I think will help people move up, that I talk to almost on a daily basis, is for those that have been in their homes for 2 years, that just had their 2-year anniversary,
sure,
made a great profit, sometimes in many cases a year's worth of their regular job income or more in a short amount of time, and now they can take all that money tax-free. What a great opportunity. Take the money tax-free, no capital gains tax, and move up.
Gino, you couldn't be more right. And really, that's the key to a nice, steady, balanced Santa Clarita market. It can't just be driven by the first-time buyer. We can't just have a frenzy in the under $400,000 price range. It doesn't help the $700,000 seller in Stevenson Ranch, or the $600,000 seller in Fair Oaks Ranch, or the $1 million seller in Sand Canyon. All those people will have more potential buyers if we can just get the move-up buyer in that $400,000 to $650,000 range to put their home on the market and make a move up. And there's every reason in the world to do so.
And thank you for sharing that, Neal. If you just tuned in, you're tuned into the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220 KHTS, and we're here with Neal Weichel with RE/MAX, just sharing with you how we can stimulate our own stimulant, our own QE, basically, right here in Santa Clarita.
QESCV, all right.
Right. By helping, and it's for a good cause, because when we talk, and you do this more than we do even, when you talk to the buyers, they want that bigger home. They may need that bigger home because families are growing. We're in the bedroom community of the world right here in Santa Clarita. And I love that we can help educate them on their opportunities. That's all we're doing. We're not trying to make a buck. It's really educating them on their opportunities. They don't know, one, how much their home is appreciated. That always surprises them.
Right.
And two, how their opportunities to purchase a home, how little it may affect their economics to be able to have that home of their dreams, and therefore open up the door for others. And the other thing we preach a lot here on the show, and Gino, hears us all the time, is that if you wait, you may be priced out of the market, meaning either as a new home buyer or as a move-up buyer. Meaning if those prices go up, you may price yourself out.
Even if prices don't go up, Don, if interest rates go up. If
yeah,
prices stay
I was
exactly
just going to say, my
yeah.
concern for getting priced out of the market has nothing to do with home appreciation, it has everything to do with interest rates.
Sure.
Because as I said before, this is a market driven by affordability. And when the perception, real or imagined, is that the affordability has changed, like it did this June, all of a sudden, I mean, you can. It's so funny, guys. You can literally feel the change in the market. You can feel the buyer you're talking to on the other end of the phone saying, I think we're just going to take a little break. They weren't saying that in April, but they were saying that in July. They're just saying, we want to wait until some more homes come on the market. They weren't saying that in May, but they're sure as heck saying it in October. Okay, so when those kinds of things happen, it's always driven right now by affordability. The objection we got in 07, 08, 09, 10, 11, 12 from people moving up was, I don't want to buy in a declining market. I don't want to buy a house for $750,000 that's going to go down in value. I don't think that's the objection anymore. I'm real clear that that's not what's happening. It may not go up in value anymore, but it's not declining the way it was then. But now the issue is going to be, well, you know, I want that 3.5%, like you said before. I want that 4%. If rates go back up 5, 5.5, 6, look out, because I will tell you, a lot of people say, you know, we're going to put that on hold. It's affordability more than I've ever seen in my real estate career.
So when we come back, we'll talk a little bit more about affordability, because I want to focus on what I know best is Tesoro. And let's talk about affordability in Tesoro and other areas like that, because I think that's going to have a major impact on next year.
So don't go away. We have a great close from Mr. Neal Weichel, a Remax, letting you know what's really going on in the market today right here in Santa Clarita when we come back.